This video will likely get a few people riled up since we do have a lot of diehard Dave Ramsey clients and Dave actively preaches against the use of credit. So for those of you in that camp, this video is not for you.
But we work with a lot of clients, and many of them are very wealthy families who do use credit and do actively monitor their credit scores.
This video is for that group and for anyone else who finds themselves somewhere in between those two groups. So here we go. Credit scores can feel kind of pointless when you're wealthy. You're not applying for loans every month. You're liquid, so who cares?
Well, lenders do, underwriters do, even potential business partners care. Your score still says something, partially just about how you manage risk.
And if it's not in great shape, it can quietly work against you. So let's tighten it up.
First, credit utilization. This trips up a lot of high-income earners. You can charge a bunch, pay it off every month, and you figure you're fine. But the score, it's based on what your balance looks like on the statement date, not whether you paid it off later.
So try to keep your usage under 10%. If you're a heavy spender, consider paying off some or all of the balance mid-cycle to keep the overall percentage of the credit line used down. Then your score won't take a hit for a few weeks, only to rebound as soon as you pay the amount off at the normal due date.
Another option is to spread it across a few cards to keep the percentage of credit used low prior to paying the balances off in full at the due date.
Next, credit mix. Your score likes variety. Credit cards, mortgages, maybe a car loan. If you have no debt at all, that can actually make your score go down. Side note for our Ramsey clients that are still watching, this is how you make your account go to zero. Now back to everyone else.
Lenders want to see how you can manage credit, not just avoid it. Also, don't rush to close accounts or freeze your credit. Closing old cards cuts your history short, and the length of your oldest credit account is one of the factors that's built into your score. And freezing your credit? Smart, but don't forget to unfreeze it before applying for a new car loan or mortgage.
And finally, check your report once or twice a year minimum. Even smart people miss things.
The bottom line, your score speaks volumes to people like your insurance company and the utility company. If you want to make sure it's saying something good, these are several of the key factors.
In closing, most of our high net worth clients do in fact either pay cash for cars or they finance them for a very short period of time just to have something hit the credit reports every few years. Some do have mortgages, while most have paid off houses.
We are big advocates of having no car payments and having a paid off mortgage. But if you're going to be financing a car or buying a house or buying a business in the next few years, then your credit score absolutely can make a big difference in what rate you get from the banks. And it can also impact a lot of other things in your life.
We're glad to visit with you about any of this if you'd like to discuss it further.